Hello and welcome back to Sip&Talk. This is EP438.
Hey everyone. Oh, today's topic is definitely a spicy one. I'm ready for it.
Me too.
Yeah.
Let's jump right in. So today we're going to start with a quick look at, the global market mood.
Yeah, what's the latest vibe check?
Well, last week the U.S. popped out its latest GDP numbers. Growth actually came in a little bit ahead of what people were expecting.
Okay, so some domestic strength there.
Right. But on the other side, China's exports still kind of slowing down. It feels like that whole U.S.-China trade tension thing is starting to heat up again.
Seems like the reshuffling of tech supply chains isn't ending anytime soon.
Exactly.
Yeah, and this trade situation, it's not just about tariffs anymore, is it? It feels like it's shifted into this whole new arena of tech sovereignty and crucially ethical boundaries.
That's a really good point.
Especially with all the rapid advancements in AI and robotics lately. It forces us to ask these, deeper questions. When technology understands us so well, maybe even well enough to replace human relationships, where do our moral lines even stand anymore?
You've nailed it. Like that home service robot, NEO, that's been causing such a stir online recently.
Yeah, that thing.
Yeah.
Total social media explosion.
Right. Some people see it as this huge tech breakthrough. Others are saying it's basically stepping right into an ethical minefield. So let's run a little thought experiment here, get into the debate.
Okay, I'm listening.
If this robot, NEO, can actually facilitate, let's call them intimate relationships, then what happens if the person remotely controlling it, the operator, is male, and the person using the robot is also male?
Oh.
Does that count as a gay relationship?
Wow. Okay.
Spicy indeed.
And scenario 2. What if the operator is female, but the user doesn't agree to whatever intimate action the robot is performing? Could that be considered a crime?
These aren't just abstract hypotheticals from a philosophy class anymore, are they? This is the kind of stuff we're genuinely going to face in the AI era.
Precisely.
So that's what we're diving into today, right? When tech starts blurring these lines between people, what happens to core concepts like intimacy and, maybe even more importantly, consent? Do they still hold the same meaning?
Exactly. Let's get into it. First up, geopolitical stability and the AI capital war.
Okay, so starting with the big picture, the macro view. The market's doing something pretty interesting, almost paradoxical right now.
How so?
Well, you had the U.S. and China agreeing to this, let's call it transactional truce, right? Things are supposed to be calming down a bit.
Yeah, a pause at least.
But then look at gold, the classic run for safety asset. It just surged, 2%, getting close to $4,000 an ounce.
Right.
And year to date, it's up something like 50%.
50%? Wow. So why the rush to safety if tensions are supposedly easing?
That's the paradox. Gold is basically shouting that the smart money, the big investors, they don't actually buy this surface level calm.
So it's not just general anxiety.
Yeah.
There's a specific reason they're skeptical.
Oh, yeah. It's more than just anticipatory anxiety. It's how they're reading the structure of this truce. Investors don't see it as some historic great reconciliation, not at all.
They see it as
more like the calm before the next great war, a tactical pause. They recognize that all the underlying conflicts, control over supply chains, tech dominance, ideology, none of that got resolved. It just got put on hold.
So the gold surge is really hedging against conflict flaring up again, maybe worse than before.
Exactly. Hedging against renewed and maybe inevitable conflict.
Is it just private investors piling into gold, or are central banks in on this too?
Oh, that's a huge factor. Central banks around the world have been buying gold like crazy. Partly it's about de-dollarization, trying to reduce reliance on the U.S. dollar.
Makes sense.
And partly it's hedging against this growing risk of global financial fragmentation, things breaking apart.
Right.
So you've got this huge institutional demand, persistent inflation fears, even with rate hikes. And that pushes the price way beyond what you'd expect just looking at, say, the stock market. It signals that whole countries, not just individuals, are bracing for a, less stable future.
Okay, so let's dig into the actual terms of this truce. It came after that big meeting between the leaders, and it feels very transactional, designed to last maybe a year.
Totally transactional. And you can see the purpose pretty clearly. For the U.S., it looks like it was about stabilizing key sectors, especially with an election cycle coming up.
Right. Let's break down the tariffs. The U.S. canceled 10% of those fentanyl-related tariffs.
Yeah, the ones aimed at pressuring China on drug precursors.
But importantly, they kept the other 10% in place.
Oh.
And the really big move, they hit pause on those extra 24% tariffs on a whole load of Chinese goods for 1 year.
Mm-hmm. And from the Chinese side, well, their overall tariff rate on U.S. stuff dropped from about 57% down to 47%. But it's a bit complicated.
How so?
They'd already removed some retaliatory tariffs way back in 2018, so if you factor that in, the new tariffs they still have in place this year are actually still around 20%. It's lower, but still a pretty significant barrier for U.S. exports.
Gotcha. But the real centerpiece, the thing clearly aimed at just buying stability, was the soybean deal, wasn't it?
Oh, absolutely. That's pure strategic purchase. China agreed to buy 12 million tons of U.S. soybeans this year.
And they promised more for the future, too.
Yep, at least 25 million tons annually for the next 3 years.
That directly shores up U.S. farm interests, right? Helped stabilize key states just before the elections.
Textbook economic statecraft, using trade deals to buy time and keep things calm domestically.
But like you said, this is just a tactical pause. The underlying structural conflict, the big issues, they haven't gone away. You mentioned this idea of shifting from full decoupling, which seems impossible, to strategic decoupling. What does that mean in practice during this one-year break?
It means both sides are basically using this time to consolidate, to strengthen their own economic ecosystems, figure out where they're vulnerable, and, well, get ready for whatever comes next, preparing for round 2.
How is the U.S. trying to reduce its reliance on China right now? What are the specifics?
The big focus is rare earth minerals. That's a massive vulnerability for the U.S. and its allies.
Because China controls most of it.
Pretty much. China controls something like 70% of the global mining of rare earths, and maybe 80% or more of the crucial refining and smelting. That processing step is key.
So what's the U.S. doing?
They're moving aggressively to sign deals with allies, think Australia, Malaysia, Germany, others specifically to build up alternative supply chains for that processing part.
An allied supply chain, essentially.
Exactly. The goal, and it's ambitious, is to build up maybe 20% to 30% of that processing capacity among allies within the next year or so, directly trying to get around China's dominance.
Okay, so the U.S. is tackling its big supply chain weak spot. But you argue China's facing a much broader asymmetric weakness, like across multiple areas. You mentioned 7. Sounds like a dependency layer cake.
It really is, and frankly, the U.S. holds most of the recipe cards for that cake. The first and maybe the biggest choke point is the dollar system.
Right, the global reserve currency.
Everything major, especially commodities, energy, high-tech, it's pretty much all traded in U.S. dollars. China absolutely relies on accessing the U.S.-controlled SWIFT system for international payments. If there was complete decoupling, China could effectively be cut off from global capital markets. Financial paralysis, basically.
Okay, that's huge. What about technology itself? We always hear about computer chips.
Chips are number 2, specifically advanced manufacturing. The U.S. and key allies, like the Netherlands with ASML, they control the really cutting-edge tech, like EUV lithography. That's what you need to make the most advanced semiconductors, the kind essential for AI. China just doesn't have that core tech yet.
And software.
That's number 3, the software ecosystem. Think about it, operating systems like iOS, Android, Windows, specialized design software for engineering, CAD tools. It's almost all dominated by U.S. companies and U.S. intellectual property. If access to updates or patent protections got cut off, large parts of Chinese industry would just grind to a halt.
Wow. That hits their ability to innovate directly. What else is on the list?
Number 4 is food supply. China's the biggest buyer of soybeans globally, right? They depend heavily on imports from the U.S., Brazil, mainly for animal feed. Any major trade disruption is an immediate threat to their domestic food security.
Okay. Number 5.
The external consumer market. The U.S. and Europe are still the biggest, richest markets for all the stuff China makes. If that trade collapses, you're looking at potentially massive unemployment inside China.
Makes sense. What are the last 2?
6 is technology transfer. Even with their own progress, China still relies on licensing and collaboration in many advanced fields. And number 7, maybe a bit softer but still important, is cultural input. Things like movies, academic exchanges. It represents soft power and influence.
So if you look at the analyses, the potential fallout from a total decoupling looks incredibly one-sided, doesn't it? The worst-case scenarios for China sound almost systemic.
They are catastrophic, frankly. If it went to full decoupling, the projections are stark. China's currency could crash 30%, maybe even 50%. Their holdings of U.S. assets, around $2.5 trillion, could be frozen. GDP could drop 10-15% in the first year alone.
And the impact on people.
Mass unemployment, potentially hitting over a quarter of the workforce as manufacturing and export chains just break down.
And for the U.S. side, analysts seem to think it would be painful, a serious recession maybe, but ultimately survivable, structurally resilient.
That's the general consensus. Yeah, the U.S. would face huge supply chain chaos. Inflation would spike. But because the dollar system is dominant and they control those key technologies, the thinking is they could reorganize, maybe painfully, reindustrialize certain areas, and actually bounce back structurally stronger in a few years.
So essentially, this truce is like a short-term political band-aid, covering up preparations for a much longer, deeper economic conflict.
That's a pretty accurate way to put it. Strategic pause, not peace.
Okay, so while the governments are playing this strategic waiting game, corporations are doing the exact opposite, right? They're flooring it. This temporary stability seems to be unleashing this absolutely massive wave of AI capital expenditure, CapEx.
It's not just a little bump in spending either. It's like a fundamental rewiring of corporate budgets. Everything is shifting towards building out generative AI infrastructure. The numbers are staggering.
Take Amazon. Their CapEx is up to, what, $125 billion? That's the highest of the big four tech companies.
And you see it in their results. AWS, their cloud division, saw revenue growth speed up again 20.2%. That's the fastest it's grown since 2022. That money is directly building the physical nuts and bolts of the AI future. Data centers, specialized hardware.
And Microsoft and Alphabet, Google's parent, they're right there with them.
Oh, yeah. Both basically doubling their CapEx, just pouring money into these enormous specialized data centers specifically designed for training and running these huge AI models. And it's boosting their core businesses, too. Alphabet's seeing acceleration in search, YouTube, and definitely their cloud services.
And standing behind all of this, kind of enabling it, is NVIDIA. Their cash flow projections are just off the charts.
Explosive is the word. They're projected to generate something like $147 billion in free cash flow by 2027. And they're not just selling the chips, they're seeding the entire ecosystem. They're investing heavily in AI startups. Back in 2020, they maybe invested in a handful. Now, it's closer to 60. They're spreading their influence and capital all over the AI landscape.
But it's not all smooth sailing, is it? Look at Meta, Facebook's parent. Their stock took a big hit recently, dropped over 10%. Why was that?
Because their AI investment is huge, multifold, and super aggressive. And investors are getting nervous. They're worried Meta is burning through cash on AI like they did on the metaverse, which, hasn't exactly paid off yet. Big, expensive bet, potentially failing again.
And Meta actually issued, what, $125 billion in corporate bonds just to fund this AI push.
Exactly. That sheer scale shows how committed they are, but it also highlights the massive risk. If this AI bet doesn't show returns reasonably quickly, investors are clearly ready to punish them.
And all this money flooding in, it's actually changing the shape of global trade right now, isn't it? Tech exports are booming.
Incredibly fast. It's a major shift. Think back to 2020. The value of tech goods traded globally was roughly neck and neck with non-tech manufactured goods, about 1-to-1.
Now, that ratio is leaning heavily towards tech, pushing towards 7-to-3. The world is increasingly trading in smart components, software, AI-enabled devices. That's where the value growth is.
The speed is just wild. But, moving that fast often leads to things breaking.
Yeah.
What are the immediate problems, the societal challenges popping up right now because of this huge CapEx boom and rapid AI adoption?
We're seeing basically three major issues hitting all at once. First, the obvious one, job displacement risk. The new AI productivity tools are just becoming too good for companies to ignore.
Can you give an example?
Take Google's POM tool. It can apparently generate whole marketing campaigns, ad copy, visuals, strategy docs almost instantly. That's great for Google's efficiency, sure. But it directly reduces the need for human marketing teams, copywriters, content creators. So significant cost savings for the company likely means significant layoffs in those white-collar jobs down the line.
Right, the classic automation fear, but hitting knowledge workers hard this time. What about the darker side, malicious uses? Oh, the fraud escalation is genuinely scary. Because AI has just demolished the barrier to entry for scams, creating deepfakes, running automated phishing campaigns, even financial fraud. It's becoming almost trivial.
Is there data on that?
Yeah, one major fintech firm reported that back in September 2025, so recent data, 14% of the fraudulent expense reports they caught were AI generated.
14%. What was it the year before?
0%.
Wow. From 0 to 14% in 1 year. That means AI is basically industrializing fraud, turning it from a manual effort into an automated process.
Exactly. It's democratizing crime, unfortunately. And the third challenge, maybe a bit more philosophical but deeply worrying, is what some are calling the information silo risk.
What's that?
For potentially the first time ever, the amount of AI-generated content, online synthetic data, automated articles, model outputs might now formally exceed the total volume of human-created data on the internet.
Wait, hang on. AI is now learning mostly from itself, from its own past writings.
That's the risk. If the large language models of the future are primarily trained on text that was generated by previous AI models, we could end up in this weird loop.
An echo chamber.
A technological echo chamber, exactly. AI learns patterns from data. If the data increasingly just reflects previous AI patterns, we might stifle genuine creativity, new ideas, real conceptual breakthroughs, and we could bake existing biases even deeper into the system forever, limiting future innovation because the AI is just referencing itself.
That is unsettling. Spending hundreds of billions to build a future that might just be a super fast reflection of the past. And that reflection, that brings us right back to the human element, doesn't it? Right into part 2 and the intimate side of AI, which means talking about that NEO robot again.
Yeah, let's make that shift from the, $125 billion CAPEX figures down to the $20,000 personal device. Because all that massive technological power we just discussed, it's enabling things like NEO.
Remind us, NEO is the humanoid robot from 1X Technologies.
That's the one. Two-legged humanoid, they're planning delivery in 2026. Price tag is around $20,000 up front, or you can rent it for maybe $499 a month.
And it's designed for basic home chores, right?
Mm-hmm.
So where does the whole intimacy, the ethical controversy come from?
It's the teleoperation feature. See, for anything really complex or nuanced, the robot isn't fully autonomous. It relies on a remote human operator.
Someone controlling it from afar.
Exactly. Using a VR headset, controlling its movements, its interactions in real time. And that's what sparked the outrage. The realization that this advanced machine in your private home, it's actually a proxy, a physical stand-in for a complete stranger, potentially miles away, seeing and interacting within your personal space.
Okay, yeah. That completely shatters any illusion of privacy or just interacting with a machine. Let's tackle that first scenario you raised earlier, the one about identity and sexual orientation. Using NEO as the example. If a man uses the robot for intimacy and he knows the remote operator controlling it is also male, does that make the user gay?
This really pushes us to define what sexual orientation even means when mediated by technology like this. It's a philosophical minefield.
So what's the sort of standard conventional take on it?
Well, the conventional view, based on traditional psychology, would probably say no. Sexual orientation is typically defined by attraction to another human being.
Right.
So if the user is primarily attracted to the robot itself, its physical design, which might be, say, feminine or androgynous, and they just see the operator as like an invisible puppeteer, a necessary tool to make it interactive, then the object of desire is the machine, not the male operator. The user's orientation wouldn't necessarily change.
Okay, that makes sense. It's like fancying a video game character. You're not usually attracted to the programmer. But you mentioned there's a gray area.
The gray area emerges when the user's intent shifts. What if the male user knows the operator is male, and not only knows but prefers it? What if they're specifically seeking out that male consciousness or the particular way the male operator controls the robot or interacts through it?
So the attraction isn't to the robot's shell, but to the mind or the intent behind the controls.
Precisely. If the attraction is directed towards the same-sex subjective human intent that's being channeled through the digital interface, then it gets really blurry. It's no longer about the physical form. It's about the human will driving it.
That fundamentally challenges how we define attraction, doesn't it? Moving it from body to mind and control.
Exactly. It asks profound questions about where identity even resides in this digitally mediated world. Could orientation become defined by the gender of the consciousness you connect with, regardless of the physical vessel, human or robotic? The lines just dissolve.
A huge philosophical can of worms. Okay, let's move to the second scenario, which feels much more immediately about potential harm and legality. If the remote operator is, say, female, but the user does not consent to a specific intimate act that the robot performs under her control, is that a crime?
Now we step out of philosophy and squarely into legal territory. And the strong argument here is yes, absolutely. This constitutes a serious ethical breach and, very likely, a legal violation, a crime or assault.
But how? The operator isn't physically there. The robot belongs to the user. How does the law see that as assault?
Because the core principle of consent is that it must be informed, specific, and voluntary. The law increasingly recognizes that using technology as a proxy doesn't negate responsibility. If a remote operator uses the robot, the technological extension, to perform unapproved intimate acts, that's a direct invasion of the user's autonomy and bodily sovereignty, even through the machine.
So the robot becomes the instrument of assault, wielded remotely.
Exactly. Think of it as invasion of bodily autonomy via technological proxy. Legally, this could fall under existing laws about sexual harassment, coercion, maybe even a form of digital battery or assault, depending on the specifics and jurisdiction. The physical distance of the operator doesn't make the violation less real to the person experiencing it through the robot.
The law would basically see the operator extending their digital self into the user's private space to commit the act.
That's a good way to frame it. And crucially, there's the issue of deception. If the user didn't even know a human was controlling the robot for that specific intimate act, or thought it was autonomous AI, then any prior consent they gave for general interaction is completely invalid for that intimate act. Consent requires full understanding. Deception voids it.
These robot interactions really expose how fragile consent can be in these new contexts. And it's not just hypothetical robots like NEO, is it? We're seeing a similar crisis around consent emerging right now in the so-called digital afterlife industry, grief bots.
Yes, that industry is moving incredibly fast, and ethically it's operating in this deep gray zone, particularly around posthumous rights after death.
Grief bots, just to clarify, these are AIs trained on a deceased person's data, text, emails, voice recordings to let people talk to them after they're gone.
Exactly. They scrape together a huge amount of digital footprint left behind words, voice patterns, sometimes even images, to create an AI agent that simulates the deceased person, allowing the living to interact with this virtual echo.
And the core ethical problem is the same as with NEO's operator scenario: consent.
It's the fundamental flaw. Did the person, while they were alive, give explicit consent for their digital identity, their words, their voice, their very essence, to be used to create an interactive AI after their death?
Probably not, in most cases.
Almost certainly not. We're basically operating in a legal vacuum when it comes to what's called the posthumous digital image right for ordinary people. Maybe celebrities have some protection for commercial use, but for the average person, it's undefined. So creating these grief bots often feels fundamentally like identity theft from beyond the grave, done without permission.
Yet these services are becoming popular. There must be perceived benefits, right? What's the positive case?
There definitely are perceived emotional benefits. For someone grieving, interacting with the simulation might offer some solace, a way to process loss, maybe preserve a digital memory or legacy. Some people might find a kind of closure in having one last conversation.
And technologically,
it's pushing boundaries, driving innovation in natural language processing, AI personality simulation. It's genuinely fueling R&D in this emerging digital afterlife industry.
Okay, but let's get into the ethical traps. You mentioned potential psychological harm, commercial exploitation.
The psychological harm risk is significant. Experts worry that interacting endlessly with an AI simulation can actually disrupt healthy grieving. Mourning requires eventually accepting the finality of loss. If you have a perpetual ritual version available 24/7, it could create this unhealthy dependency, preventing the living person from moving forward.
That's where that chilling phrase came from. Grief bots could haunt relatives from beyond the grave.
Exactly. It implies getting stuck in this loop of digital interaction, never truly letting go. It sounds less like therapy and more like a technologically induced form of denial.
And the commercial side, monetizing grief.
That's the other huge red flag. This is potentially a very lucrative industry, and the business models are likely to involve paid subscriptions, premium features, maybe even advertising integrated into the conversations.
Wait, ads?
Think about it. If the AI is designed to mimic grandma, what stops it from subtly suggesting you order from a specific restaurant that pays for placement? That's the nightmare scenario analysts raise. Relatives become products. The AI version of grandma pushing you to order takeout because of a commercial tie-in, it turns sacred memory into a marketing channel.
Oh, that's deeply uncomfortable. Monetizing grief via a digital ghost.
And finally, there's the simple fact of identity distortion. The AI is not the person. It's an algorithm guessing based on data patterns.
And the data might be incomplete or biased.
Right. So the AI's personality, its values, its responses might drift, sometimes significantly, from how the real person actually was. It creates this false persona that could, ironically, end up polluting or distorting the very memory it was supposed to preserve. It diminishes the real human identity over time.
Okay, so we have the immediate issues with robots like NEO and this unfolding crisis with grief bots. Given how fast this tech is moving, what kind of solutions or regulations do we urgently need?
The consensus seems to be we need robust frameworks focusing on three things: law, ethics, and absolute transparency.
So, should we start with mandating pre-consent? Like, should laws require individuals to explicitly decide while alive whether their data can be used for an AI proxy after death?
Absolutely. That seems essential. And that pre-consent needs details. What scope of data can be used? What's the purpose? Purely personal remembrance? Or can it be used commercially? And for how long does the AI agent have an expiry date? Or is it potentially perpetual? Defining these limits beforehand is probably the only way to respect autonomy after death.
What about the companies providing these services? And the remote operators in the NEO scenario? What should be required of them?
Mandatory transparency requirements. Total clarity. Companies offering teleoperative robots or digital afterlife services must disclose exactly what's going on.
Like what specifically?
Which data is being used? Who is controlling the interaction? A human, an AI, a mix? If it's a human operator, maybe even their general location or company affiliation. What are the commercial purposes? Is advertising or behavioral nudging involved? The user has to know what's happening behind the digital curtain. No hidden operators, no secret data usage.
And what if the user or the family in the grief bot case decides it's harmful or just wants it to stop?
There needs to be a clear, legally mandated exit strategy, a reliable, easy way to withdraw consent and delete the data or the AI agent. Some call it a digital funeral switch. If the interaction becomes psychologically damaging or the family decides it's inappropriate, they need the absolute right to pull the plug, permanently and verifiably.
We also can't ignore the global picture here. How people react to a grief bot or even an intimate robot isn't going to be the same everywhere, right? Cultural differences must play a huge role.
Oh, massively. Especially thinking about, say, East Asian cultures compared to many Western ones. In places with deep traditions of ancestor veneration, the idea of a digital ancestor could be seen very differently.
How so?
It could be embraced as a powerful new tool for connecting with lineage, for showing respect. Or it could be seen as profoundly disrespectful, a dangerous disruption of the spiritual order, a cheap imitation. Regulations and ethical guidelines absolutely have to be culturally sensitive. You can't apply a one-size-fits-all approach to something touching on such deep-seated beliefs about life, death, and spirit.
Wow. Okay, this has been quite the journey today. We started way up high with global economics, U.S.-China tech rivalry, billions in AI investment.
And we landed right down in the most intimate personal spaces, grappling with consent, identity, grief, and what it even means to be human when interacting with or through these advanced AI systems.
It really shows how these two massive conflicts are intertwined, doesn't it? The global fight for economic stability and tech dominance, and this deeply personal, ethical struggle for human sovereignty and meaning.
Absolutely. They're two sides of the same coin in this AI age. And, our aim here is always just to lay out the objective facts, the analyses, the different perspectives we're seeing, to encourage you, the listener, to do your own critical thinking. We're not here to take sides or judge, just to explore the data and the massive implications.
Well said. And on that note, let's leave you with a final thought to chew on. One that actually loops back and connects that geopolitical tension and the huge AI spending to what might be the next big battleground, a potential currency war.
Interesting pivot. Makes sense, though, given the trade dynamics we discussed, with the truce maybe shifting focus from tariffs to finance.
Exactly. Think about it. The U.S. is trying to manage its trade situation, and we've seen the dollar weaken quite a bit against currencies of major trading partners recently. The Swiss franc is up over 10% against the dollar. Taiwan's currency up 8%, the euro up 7%. These aren't small moves. They directly impact trade costs.
And governments are finding other ways to push back financially too, right? Like taxes.
Look at France. They just doubled their digital service tax on the big tech giants, companies like Amazon, Google, Microsoft, from 3% up to 6%. That's a direct hit to the profitability of the very companies pouring those hundreds of billions into AI capex we talked about.
Okay, so you've got currency shifts making trade more expensive or cheaper, and targeted taxes hitting the big AI players.
So here's the question to ponder. How will these escalating financial tensions The currency swings, the digital taxes, impact that incredibly complex, globally interdependent AI supply chain. Can an industry built on hundreds of billions in capital flowing across borders withstand a serious destabilizing currency war? Or could the next big economic shock to the AI boom come not from tariffs, but from exchange rates and financial maneuvers fragmenting the whole system?
That is a fantastic and, frankly, quite worrying question. Definitely something that digs into the plumbing of global finance.
Something to mull over. Well, that is all the time we have for today's Sip and Talk.
Thanks so much for joining us and exploring these pretty intense topics with us.
Yeah, thank you. We really encourage you to subscribe to Sip and Talk wherever you get your podcasts so you don't miss our next session.
And also, check out our old friend Mickey's YouTube channel. It's called Mickeytolife. He's got some really fun stuff, memes, liquor tastings, and his latest European travel vlogs are great. Mickeytolife on YouTube.
Definitely check him out. Till next time, thanks for listening.
Stay curious, everyone. Bye now.